Hello, my name is Wes, and I'm the most interesting man in the world. I'm an investor from down in Africa, and I had a few extra little bit of cash to spend, and was looking at these two companies, Audi and BMW, and was wondering which I should invest my money in. So I brought in some friends for help.
Right now, we're looking at the price to earnings ratio. Now, right now, you have Audi around 14 and BMW around 8. Now, you always want a lower number right now in today's economy because it's a lower risk. With Audi having a higher cost right now, with that being, or excuse me, higher ratio, with that being said, is they have a high risk, high reward, but right now, they also are in a lot of trouble from their Volkswagen. They got in trouble breaking the law, so they're having some financial issues right now. So we want to keep you in the safe room right now to make sure you're getting a good steady return on your investment.
I also noticed here with the earnings per share, Audi is earning 5 times the amount that BMW is, so why would I be investing my money into BMW?
I'm really glad you brought that up, because when you first look at this, it is quite deceptive. You're only looking, BMW is only giving you back $11.53 per share. Well, Audi's going to give you $55.78 back per share, on average. But when you actually think about how much money you're investing, with Audi, you're investing $7 or $8, and you're only going to get $55 back. However, if you invest the same amount of money into BMW, you're actually going to get about 8.5 shares of stock for the same amount of money. Now, if you look at that, that means you're going to get almost double the amount of money back from BMW that you would from Audi.
That's a very interesting point. What are these other ratios over here?
Wes, how you doing?
Good.
So I'm going to go over 2 ratios over here with you. First, we're going to go on return on equity. So the average return on equity in 2015 was around 10.38. We're in a 2018 now. Stock market's doing very well. And for right now, we're getting a 7.39 return on equity for Audi, which is BMW is doubling the return on equity for BMW. So we're getting a bigger bang for our buck right now. I mean, 14.9, round that up to 15. I mean, that's doubling Audi. So if you want to double your money and get better return on your investment, BMW is your choice, obviously. So now we're going to look at profit margin. How well a company is profiting. So for every dollar Audi spends, they're getting $1.03 in return for profit. But for BMW, they're getting $1.07 in return. That might not be a big of a difference, 0.04, but in all reality, I mean, think about how much Audi and BMW are spending, tens and thousands, millions, probably billions of dollars, and they're getting a 0.04 bigger difference in profit than Audi is, which is a pretty big deal. It's doubling. BMW is doubling Audi's profit margin. So whichever company you want to invest in, my opinion, based on return on equity and based on profit margin, the better, safer bet for the more money you get in your investment would be BMW other than Audi, even though Audi might be, I mean, you could if you wanted to, just based on these numbers. They aren't bad, but based on BMW's terrific numbers here, BMW would be a great case for your return on investment.
Thank you for that. I am the most interesting man in the world, and I don't always invest, but when I do, I buy BMW.